The following is a presentation of TFNN. It is now time for the Diagnostic Trading Hour with your host, Darrell Martin. Now, Darrell Martin.
Alrighty, folks, how you doing here? Welcome back to the Diagnostic Trading Hour, and getting everything up and running for you. And let's see here, what do we got going on right now? Today we have the market, and it's moving pretty interesting. It's had a big run this morning, right off the open, and it just kept going and going, and really going. And I was hoping there'd be a short. There wasn't a short this morning, but the U.S. Canadian Strangle that we talked about earlier today, that did work out, went pretty well. U.S. CAD, I talked about yesterday, going ahead and hopping in on that one, and making sure you took advantage of that for the 10 o'clock news announcements that were coming out. And let me pull that chart up for you. We'll look at that right here. And you can see right there at 10 a.m., we had a nice move right here. We go. And it dropped on down. And we were able to take just a nice profit on the trade, get in for about $20, $25 risk, and take off at least a $20 profit on the trade if you would have chosen the right strikes based on the deviations, getting as close to those deviations as you can, and trying to keep your risk at about $20 on the strangles. And it's a very simple trade. What we do is we go in and I look for specific news announcements, and we talk about them day after day, talking about which ones can we take, which ones are good setups, which ones should we expect volatility on. And so just a quick review, like tonight, you're going to have Australia come up at 7:30. So they'll have private capital expenditures come out. It's a heavy impact report. So it's a very easy report to hop in on and possibly do a trade with right there. But that's the private capital expenditures and report at 7:30 Eastern time. And when you do trade that, again, you will want to be looking, like I said, at the deviations. And so if you haven't used those yet, you definitely want to hop in. And I'm not talking about standard deviations, okay? I'm not talking about pivot points. I'm not even talking about fib levels for these, okay? I'm literally talking about just simply deviations. And it's a different kind. I call it diagnostic deviations. And what we're doing is we're looking at how other statistical traders look at the market, okay? We're pulling the expected movement out of the option pricing. It's called the implied volatility. We're pulling that out of the options to calculate our deviation levels. And by doing that, it lets us have a decent idea. So what was happening was it was up here is I was basically targeting the settlement price, and I was targeting the half deviation, both of those on the trade. And by doing that, I had an exact target of what I was going for on the U.S. Canadian this morning. And I just accessed the deviation levels right here in the members area. So if you go to tfnn.com, then you can see right here the diagnostic box spread analyzer. You can get access to the deviations. You get access to the live spread scanner for Nadex. And it's very helpful, especially like say tonight you're doing the Aussie dollar trade. So you can go here, you click Aussie dollar, you say, you know what, I want to buy and I want to sell. And it'll bring up, all the possible spreads. And you could say, I want my risk-reward ratio to be at least 1. I don't want to risk more than $100. And it instantly narrows it down. Maybe I want, at least an hour till expiration. And it'll keep narrowing it down until you've got it to what you want it at. And then you can narrow down and, okay, well, I want to do a straddle. And I want to use maybe these two right here. Let's see, we can find 1.180. And this one right here. It's about $20 risk on it. And so about $20 risk. So if it moves, at least 20 pips, then I'm looking at break even. If it moves further than that, then I'm making some money from there in either direction, okay? And so that's, the idea of a straddle is you combine two different spreads together. So if the Aussie dollar moves up or down, then you're able to make money. So at 20 pips, okay, I'm looking at break even. So how far, do I expect it to move? That's the next key. Once I know what my risk is, how far do I expect it to move? So I go over here to Aussie dollar. Well, a full deviation right here is, 65 pips. So I go up and I go down, and then I find the lowest risk trade I can find. That's basically going to let me take advantage of that. That's at least not only 20, but if I think it's going to move 20 pips, or it has to move 20 pips, and I need like 40, right? Because I want to be able to make at least a 1-to-1 at the end. So if I can find, the ability to actually go up 40 or down 40 from there, then I'm risking 20 to make at least 20. And I may make more than that, but that's my goal, is to make at least $20 for $20 at risk, or at least $100 for $100 at risk. So I just want to equalize that risk and reward on my trades. And it helps a lot if you're using the scanner, because this is live. Your other option is actually to be in the live Nadex platform. And, nothing wrong with that at all, but you are going to have to go in and, let's see here, if I can pull this up for you, and I'll show you what I'm talking about. And I'm going to cancel a couple orders out here. Here we go. All right, so always busy trading every day. And so I'll pull this up right over here. So if you don't have the scanner, what you're going to be doing is you're going to go in and let's see here. There we go. All right, and then you hit refresh. This is big. Hit refresh on the Finder. Because if you don't hit refresh, then you're not going to see the new spreads and binaries that come up like every hour. So once an hour, you're going to want to be hitting that refresh button. Now, if you're using the scanner, it automatically is live. So when new spreads come online, it's going to put them in. When they drop off, it's going to take them out. So you don't have to worry about it. So, but if you're in here, then we can go in and we can click on, say, Forex bull spreads. And then we can click on the currency pair, Aussie dollar. And now we have, basically, we have to go through each one of these. So we have 10 spreads we have to look at, long and short. So that gives us basically 20 spreads to try to figure out which ones we want to do. And when we do that, then what we're going to want to do is, you actually want to open them up to figure out, the risk and reward. And as you can imagine, that can take a while to do the, the entire thing. And then you want to calculate distance to break even, and you want to calculate, what your profit potential is. You want to make sure you're looking at how much time there is left till expiration. That's at least pretty easy, 2 o'clock, 3 o'clock in this case. Now over here, you don't have to calculate anything. All the math is live. So it's showing you right there. It's showing you buy or sell. It's showing you how far it has to go to break even, what the risk is, and what the reward is, and what the risk-reward ratio is. And also, if you want to hedge, if you just want to say buy the Aussie dollar and sell the spread, then you can go over here, and it shows you, okay, 1 Aussie dollar contract would cover 1 mini lot on the spot USD. And you basically have to have it move, say, 14 pips in order to, if you shorted and bought the spread, if it moved down 14 pips, you'd be break even. In this case, it moved up 5 pips to be break even. This one's 9 pips. So this one's, huge. It's 86. You wouldn't want to do that at all. Would not be a good trade to hedge with in the slightest. Just because of where it's priced at. I mean, there's just no real benefit. It's right in the middle of a huge spread. It's $88 risk, $108 profit. So there's really no big edge on that spread at all. And you can even get rid of that spread if you wanted to by going up like 1.2. And it would drop that one off, and now you have just a couple more spreads available that have good risk and reward put together. So now it's like, okay, these are my 3 real choices I should be looking at. And you can make it tighter if you want to. You can tighten it up, make it 1.5, and by doing that, it'll drop it off permanently. You won't even see it unless you have at least a 1.5 reward to $1 risk ratio, and it makes life really, really easy. But the biggest thing you're going to want to use is also these deviations. Just where do you expect the market to move to next? And I mean, this morning, like I said, the market was just on a bit of a tear run, and it was flying up. Let's see here. I'll pull up a chart on just the NASDAQ, and we'll look at that one and put it right up here. We go. Okay, let's see. It ought to be coming through here in a second, so that way all those watching over on the TFNN website can see it right there. So this was the NASDAQ this morning. I mean, it opened up. We had some good news this morning that came out early in the AM. We had the Italian durable good orders came in better than expected. Durable goods came in a little lower than expected, but it's a lower impact report. So it's always important to know what the high impact reports are. Bernanke came on, didn't really get pounded too hard. And after not really, people were worried about him saying something negative about QE. After he didn't do that yesterday, then people were like, oh, well, maybe he isn't going to, completely eliminate QE. So that sounds good. He doesn't seem like he's leaning that way. Market got all giddy about it, decided to rally at the end of the day. And then we had pending home sales. That one came out at 10 o'clock as well. That was positive, so that further puts the market up. And then Draghi, he just came on, 45 minutes ago doing his little rah-rah speech. So there's basically a lot of good news as far as the U.S. goes this morning, and a little bit of bad news overnight in some of the countries, a little bit of good news overnight in some of the countries. But overall, pretty good. The one bad thing that did come out for the euro last night was the Italian 10-year bond auction did tick up significantly higher. Okay, it actually ticked up to 4.83, and last time they were paying a 4.17 yield. And so that's obviously not that great of news for the euro dollar. If I pull up a euro dollar chart over here, let's see, we'll be able to see this. And we can zoom in on that one a little bit. And you can notice just right here today, I mean, it didn't destroy it, but it definitely was not, it didn't help it rally. So it's really just been a big up and down day, a pretty, volatile day, really, with, what do we got, 50, 60, about 50 something pips on the euro dollar from high to low today. So just some huge volatility in the euro, and those bond auctions not helping out that much in the process. So, it's always good to know when those news announcements are coming out. It's not that you're trading them so much to be directional. It's more that you're trading either to strangle them, so to go both ways, straddle them. And you strangle with a binary, you straddle with a spread, okay? So you can do either one. And so it's one of my favorite things to do is to go in and trade them that way. Now the other thing you can do is you can just be aware of them. Know that they're coming. So you tighten your stops so you're aware of it. Some people choose to get out completely. So it just depends upon what it is you're trading. Some reports have a bigger impact than others, but you definitely want to have a stop loss in place whenever the news reports come out. One of the reports that comes out every week that you can usually take advantage of is the oil inventory. Comes out on Wednesdays, and that one comes out at 10:30 in the morning, so we can look at that real quick. And I'll show you what that one did right here. At 9:30 it came out, and it seems like it didn't do a whole lot at first. The oil inventory report came out, and it may have been one of those trades you got into, decided to get out of. Came in a little lower than expected. The actual number came in at 1.1 million. They thought it'd be at 2.4, and that number is significantly lower than last time. So once the market woke up and realized, what happened, it did decide to spike up, but it went ahead and gave most of that back. So even though it did have a pretty, decent little spike right there, it took some time for it to happen, and it didn't really hold on to it. But if you're trading oil and you're short, and a bullish report on oil comes out, meaning oil's going to go up because the inventory drops, then that's very, very dangerous, and it's very wise for you to be out of that trade. We can look at the report on oil, and we can look at the deviation levels with it. So if we go in and tie that in right here, we'll pull up the oil contract, and what we'll see is that the big moves on oil basically took us down and back up. So we came down basically overnight, and we flew back up to the deviation level and then dropped back down. So we'll cover that a little bit more in detail when we come back from this break.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Darrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
All right, folks, welcome on back here to the Diagnostic Trading Hour. And we're just going through looking at, right here, like on oil this morning. Like I said, you could have easily done the strangle play on it using the binaries or the straddle play using the spreads. And we can see right here when the report came out, and we pulled up right about there. So, and the market went up almost perfectly to a half deviation before it pulled back. And one of the things I always teach people, like say if you're trading the binaries, is to get out at, if I buy, to sell at 43. I don't wait till it gets to 50, which is what price it technically would be at when it hits the strike. Because sometimes it doesn't hit it by just, it may miss it by just a few ticks. And we can see, like, right here we have 93.39. The high of this bar was 93.37. So to miss out on a trade because you were waiting for those last couple ticks, I'd rather give up a couple ticks consistently as have a winning trade, having multiple winning trades turn into losing trades consistently, which is more likely to happen on a trade that you hold on to because you're waiting for that last perfect little tick. You also have to account for bid-ask spread and things of that sort. But so that's just another example of using the oil trade. Tomorrow you have natural gas inventories. That comes out every Thursday. So that's a trade that you can easily take advantage of when you're trading. So tonight we got private capital expenditures. That's Aussie dollars. So that's a very easy, very timely trade to hop in on. And then, like I said, tomorrow we're also going to have the natural gas inventories. We also have unemployment claims and preliminary GDP coming out quarter over quarter for the United States. So both of those are coming out at 8:30. And that's easily a gold trade, just because right now they're tying the the monetary stuff, the printing, into the actual unemployment rate. And though the unemployment claims isn't the unemployment rate, it still heavily affects the unemployment rate, since they tied it into that. And let's see, I'm going to go through and I'm going to do a little SMQ study, and I'll tell you real quick what the ideal pair is for the announcements that are coming out on that day. And it looks like we have U.S. yen seems to be the leader over and over and over again. So, I mean, on multiple reports. And so it looks like right here, and I'm seeing, okay, U.S. yen 0.8. On the Olsen scale, right here, I'm seeing U.S. yen 0.8 again. Right here, looking at it, I'm seeing U.S. yen 1.2. So, and then, let's see, here's another one, U.S. yen, we're getting 0.9, okay? So, just pulling up, just, like I said, a whole list of them. But, getting a lot of, high readings on U.S. yen over and over, meaning it basically has, is known for having the largest quake effect with, from that report at that time. There's some instances where you see some good pound dollar, euro dollar, Aussie dollar moves, but consistently, over and over again, U.S. yen is, basically one of the top, if not the top, moving pair when the unemployment claims come out. What about GDP? Do we get the same results if we look at GDP? And so I'll pull that up for you, and then you'll sort of know what currency pair to focus on tomorrow whenever you're doing this trade and seeing, hey, especially if we get U.S. yen twice, that's even better, right? I'm not sure what pair we're going to get. We're going to pull these up right quick. And, okay, so we got a pretty nice impact right there on U.S. yen. Whenever the GDP comes out, the advanced GDP. This one actually dropped quite a bit on us, so not too big of an impact on that one. That's not as impressive. This one we got a 0.9 right here. This report on GDP got, not too bad right there. That one's a 1, so that's good. And let me see here. Let me pull these off, and we'll compare them all and see if there's a better one. But I think U.S. yen may still come out the clear winner on the trade here. So let's see. Let's open up one more of these. I'll pull them all up on the screen at once for you, and then we'll just scroll through them. And then you'll have at least a trading plan for tomorrow for when this report comes out in the morning. All right, so there's 1, 2, 3, 4, 5, and so this gives us like the last 6 reports. This is like back to 2011, okay? So right here, we got U.S. yen doing pretty good. Part of the reason I'm looking at U.S. yen because I know it moves a lot on the other report. And it looks like the majority of the time, it looks like there's like one report where it didn't move that much, but the majority of the time, U.S. yen's having a good move, and it has the biggest move on the other one on a consistent basis, on the other report that comes out being the unemployment claims. So combining unemployment claims with preliminary GDP, then the U.S. yen overall looks like it definitely could be a good pair to trade. The other ones have some really big highs, but also have some really big lows. And so even on the one where we had a low U.S. yen, there's a couple other pairs that didn't move that much either. So it was just sort of like a low impact report overall. But when there was a move, we're seeing that move over and over again. So that is sort of your trade you want to check out for strangling or straddling. And just make sure that you do use the deviation levels to know where to take your profits. You're going to need that to do this trade effectively. You can get a 2-week free trial over on tfnn.com. We'll be right back after this break.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of tfnn.com. Futures and options trading involves risk and may not be appropriate for all investors. Just recently, on December 28th, Market Insight subscribers were advised to go long the QQQ, the Nasdaq 100 ETF, on December 28th at $63.91, and only 2 trading days later, after a huge jump in the markets, Market Insight subscribers were advised to sell the QQQ at $66.64 for a $2.73 or 4.27% profit to start off 2013. At the same time, Tom O'Brien had advised his clients looking for a more leveraged trade that they could have initiated a position in the QLD, the ProShares Ultra QQQ ETF, and over the same 2 trading days, Market Insight subscribers were able to lock in a $4.48 profit or an 8.47% gain in just 1 trade. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. Cancel at any time during your free trial and pay nothing. Don't miss out on the next great trading opportunity in 2013. Act today. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. Darrell Martin coined the phrase diagnostic trading, and we're happy to announce that his Diagnostic Box Spread Analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Darrell Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right, folks, welcome on back here to the Diagnostic Trading Hour. And so just going through some of the different trades, we have several setups. We got U.S. yen. Okay, you could also look at U.S. Canadian for tomorrow morning at 8:30. Also gold, because you got unemployment and GDP happening. So any 3 of those, or all 3 of those, you could check out for doing strangles or straddles over on Nadex. Even if you're not trading Nadex, you want to be aware of those because they are, high impact events that will move those pairs around. Okay, and if you haven't done so already, what you need to do is you need to go over to TFNN.com. You need to click on the Nadex banner. Once you've done that, then click on Our Products and click on Demo Account. Get a demo account. It takes about 15 seconds. Fill in your username, first name, last name, phone number, and email address. Click Apply for Demo. After you've done that, click on Create Account. Once you've clicked on Create Account, you can click Start. It takes about 5 minutes to fill in the forms and fund the account. So in 5 minutes from now, before this show's over, you could be in, up, and funded with a live trading account. Only $100 to fund an account. You have day trading ability. You can't get exercised upon, meaning no stock's going to get put to you or called away from you. No future's going to get put to you or called away from you. You don't have to worry about deliveries. You don't have to take a whole bunch of cattle or deliver a whole bunch of oil. So you don't have any of those worries happening at all. Okay, you cannot get stopped out of a trade because your risk is capped, and you don't get kicked out of the trade if it goes all the way to your maximum risk. If it keeps going, you're still in the trade, but your risk doesn't grow. and if it comes back before expiration, you actually could be profitable on the trade. So you basically have time to be right. And that's why I'm so big about trading on Nadex, is getting huge leverage, low risk, and again, having time to be right. Okay? Once you've done that, the next thing is get some tutorials. Go over to Diagnostic Box Spread Analyzer, sign up for this 2-week trial, get you access to the binary tutorials, the spread tutorials, get you access to the deviation levels, the live spread scanner, a help desk to ask questions, all sorts of stuff in there. And then, if you're going to be out in the San Mateo area that's just outside of San Francisco, if you're going to be in that area in March, register for our live free workshop. And Dan Cook from Nadex is going to be there doing some training. I'm going to be doing training. Tommy O'Brien's going to be talking about identifying the trend. I'm going to go into binaries. I'm going to go into spreads. I'm going to go into deviation levels. I'm going to talk about the hedge strategy, the ultimate hedge, where I combine futures and spreads and forex and spreads. And we're going to put a whole, setting up the trade session together, and then talk about risk and money management, the psychology of trading. All that gets taught at these workshops. We had a great response from the last one, and there's even groups meeting now after the last one, talking about Nadex and learning about Nadex. And so it's just, we had one in Denver, and before that we had one out in Tampa. So, they're going very, very well, and look forward to seeing you there. You do have to register. It is free to register. But you do have to register to reserve your seat, and then we'll confirm that you are going to be there. You'll get the confirmation email, everything, to make sure your seat is confirmed. And but make sure you register for that so you can take advantage of it. But don't wait until the event, okay? Go ahead now, get your Nadex account, get your 2-week trial. That way, when you show up to the event, it's not the first time you've heard about anything, okay? So now you're coming with like some basic information. You've already watched tutorials. You've already seen how it works. You've been demoing it for the last couple of weeks. Now you come in, you come with some good, powerful questions. And I had some people coming up, and we were just going like question after question after question. It was great. And especially during the breaks, I was like, I got to find water. And just answering so many questions. And it's because those people, it wasn't the first time they heard it. It was, okay, now that I get a little bit about this, now I want to take it to another level. And so now they were asking deeper questions. So I recommend that you definitely dive in so you can make the most of this event. And, just can't wait to see a bunch of you in person out there. So now let's look at just where the market's at overall. And let's see, I'll pull up my market watch here. We usually start off the show with this, but, we got to change it up. We got the S&P. It is up 19 points right now. We have the NASDAQ up 36. We got the Dow up 163. We have the Russell up 13. Gold is down 20 points. We got copper is down 0.5%. We got silver down over 1%. We got corn basically flat on the day, with soybeans up 14 points, which is 1%. Oil right now, after that move up earlier, remember it moved up the half deviation, is back down to basically flat on the day. We have, let's see here, it's up 8 cents right now. We got natural gas. It is, it's pretty flat. It's down about 0.25% right now. Euro dollar down up 33 pips. We got pound dollar down 2, Aussie dollar down 33, U.S. yen down 13, U.S. Canadian down 10, and U.S. franc is flat. It is so unchanged on the day. And the dollar index right now is weaker against most of the other pairs. And, there's rumors, there's all these things flying about the sequester, and there's going to be a last-minute deal, and, obviously none of this is good, and it's just stupid. And the reality is there's a lot of other things we could cut funding to. Like maybe battery makers in China that still are patents. Maybe we could cut those fundings. They're just getting out there. They're playing the politics. They're trying to make everybody look bad. And, everybody's trying to make everybody look bad instead of going, hey, what can we cut? Because there's a lot of stuff we should cut that we're just wasting money on. And, it's amazing to me, but it's pure politics. And I think the sequester is going to come, the sequester is going to go, and the sun's still going to shine. Now, I think there is going to be some negative impacts, but it's not like when we had, the fiscal cliff ceiling, and we had the sequester combined with, right, the actual debt ceiling. You put those two pieces together, that's a dangerous combination. But they separated them, and that's really why the Republicans have no leverage anymore. They separated them, and at this point now it's just, well, okay, there's going to be some cuts, and nobody's going to like it, but we're going to have to cut back. And you know what? Clinton survived a sequester. Reagan survived a sequester. Carter survived a sequester. So they've all had to go through this, and presidents that have had bull markets have went through this. And whether you like them or not, okay, not being biased, whether you're talking about Republican, Democrat, okay, both sides of the, page there, it's not the end of the world. So, and they could make it the end of the world for certain people if they want to. They could definitely hurt, but they also have plenty of other things they could cut that we have no business spending money on anyway. So, anyways, the market might start being able to realize that. Also, they were very excited yesterday when Bernanke, and again today, Mr. Bernanke graced us with his presence. And but today he decided not to bring it down. He decided to bring it up. Really, yesterday he ended up bringing it up too. So it was more the news that brought it up to begin with when he was talking. And it wasn't his news. It was just the news announcements. And then got a little bit negative, went down a little bit. But then by the end of it, they realized, hey, he's not talking about slowing down at all on QE. He's not talking about anything. And he's basically just schooling these congressmen who are, they're just going after him. With all their teeth. And he just sits back and he's like, yeah, you don't understand what's going on. So I'm not saying I like what the man's doing or don't like what the man's doing. I'm just saying, it's interesting to watch because you see them go out with complete, you're doing a currency war. There's all the key words, all the buzzwords, they're using them all. And he just sort of sits back. He's like, well, no, it's not really that. This is what it is. And at a certain point, you start doubting, you're like, well, maybe he's right. I don't know. And maybe he knows what he's doing. And, who knows? All right. I guess we're going to know here in about 10 years whether or not our country's bankrupt. Then we'll know. But, or maybe we come out and everything grows and GDP skyrockets and unemployment drops and, Bernanke goes down to the man that saved America. Who knows? So we'll find out one way or another. Either way, we just trade the markets. We trade the charts. We trade the days. And don't carry your opinion in. Don't always think, hey, it's going down. It has to go down. It's at a high. It doesn't make any sense. Fundamentals don't line up. They didn't line up either during the internet boom when things were trading at hundreds of times their earnings. That whole bubble. Yeah, eventually that bubble did blow, but it got really big before it blew up. So, just be careful. There's a lot of things right now that point to the short side. I can show you a whole list of 10 things that you should be worried about that point to the market falling down. But at the end of the day, there's $85 billion just flowing in whenever the Fed feels like it. And that constant monetary easing that's happening is, something that's really just, it's, it was actually mentioned today, you don't fight the Fed. Well, I don't think that's a good remark. Well, that's a true remark. You don't fight the Fed, okay? And the Fed is constantly, pumping money in. And we can see yesterday, and today, they pump money in right there, all right? So they did, par amount accepted, submitted. So they did, an extra billion today. So this is in millions. So $5,160,000 or $16,000 today. And yesterday you can go back and look at the report. They did it yesterday also. So then you got the temporary ones. No temporary ones today. So the last temporary one we had, I think, was January. Yeah, January 18th. But they had the permanent ones going in, and that's the daily pump right there, 10:15. So when they released it, they got done at 11. And let's go look at the charts. What happened between 10:15 and 11? Okay, this is a very good thing for you to learn. This is NewYorkFed.org, and it's under Market Operations. Okay, Markets, and then Open Market Operations. Go to temporary and permanent, and just be aware when they're doing this because it does give some oomph to the market, and you don't want to be fighting the market when this comes in. Okay. So we'll go in and look at the S&P, and it's already heading up, so it doesn't really need a lot of help, okay? It's starting to pull back a little bit, and then about 10:15, it's like, okay, we got some more money. And so it's like boom, 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 boom. It starts flying on up, okay? That is from permanent OMOs. So that's the, Treasury's way of the open market operation is what an OMO is. And as they're putting that money in there, the market is going to rise. They're making it costly to basically be in anything but a riskier security. So people who have been, good stewards of their money, have paid off their houses, have saved up money, are seeing at least their house, ideally go up in value. But they're also seeing that their savings go down in value as the dollar is, deflated. So we'll see how that, turns out overall. If it is deflated, if it is I guess not deflated, but inflated. Because inflation ultimately is the tax you don't get to vote on. That affects, more than anybody, affects the poor, or it affects those who, not even the poor, those who have retired and saved and been good stewards of their money, because it takes money out of their savings account. and it taxes it every time that dollar gets worth less. I mean, just think if you saved $100,000, and that may not sound like a whole lot right now, but 20, 30 years ago, that was a decent amount of money, okay? And now that's obviously worth a lot less money. Just think about how many gallons of gas you could buy then versus now. So I remember, back in high school, it was less than $1 a gallon for the premium. And, so now, that basically means that if whatever gas money I had allotted, then I would have an easy, basically if I had $100,000 in there, that would have bought me, let's say 100,000 gallons, 100,000 gallons of gasoline. Now it'd buy me 33,000. So I basically lost 67% on my money in the last 20, 30 years, whatever. So, when you put all the pieces together, you start realizing, okay, a good steward does more than just saves. They diversify. They have real estate, they have metals, and they have cash. So, your real estate, if it's cash flow real estate, has a lot of benefits to it because that makes money despite whether the market's booming or busting, as long as you have a good cash flow margin in there. And for your metals, then of course inflation, it's the ultimate hedge over thousands of years, has maintained its value. So a Roman tunic, so a couple thousand years ago, cost basically an ounce of gold. Today, you want to get a nice suit, it's about an ounce of gold. So if you want to get a really nice suit, right? So you put the two together, it has maintained its value. And then, does it fluctuate? Do we see that more as traders? Yes. But over time, it is a wealth, protector. And then you go into cash. Well, when there is a deflationary market, cash actually, can buy more, right? Because in deflation, everything costs less. So therefore, if you keep your dollars are worth more because they can buy more because everything is cheaper. So by putting a combination together, you get cash flow, you have wealth protection, and you have deflationary protection as well. So you want to have all three and not just one. And some people are taught just to have one. And but yeah, there's a lot of cool things to look at, a lot of cool ways to trade, and a lot of cool ways to diversify your portfolio. That's just a few of the examples out there. And now let's look at what other announcements we have coming up this week. So we talked about tomorrow and tonight. Tonight we got Aussie dollar at 7:30. We got basically the U.S. yen, U.S. Canadian, and the gold. You could be trading on the 8:30 announcements tomorrow. You also have natural gas tomorrow at 10:30. We have a couple other announcements coming out, like the PMI, but no, I wouldn't so much call that a tradable announcement. So it's tradable, but unless it's drastically different, I wouldn't really be counting on it. I'd have the other two as my main trade that I'm aware of. And then going on over and looking at, let's check out Friday. So can't believe it's almost Friday, a couple days away. Flying by this week. We got manufacturing PMI. So that's going to be a big report. That's your pound report at 4:30. And then we're going to roll on over to the Canadian GDP, which is a big GDP announcement, and it's combined with like 1, 2, 3 U.S. dollar announcements at the same time. So guess what? Friday morning, you got an easy USD CAD strangle straddle right there. And then, there's USD reports all morning long happening. So the USD CAD should be a good solid trade because not only should the CAD move the USD CAD, but then the dollar reports coming out just one after the other. Literally, there's 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Let's go 11 USD impactful reports on Friday morning, 8:30 and after. So USD CAD would definitely be a trade to check out. Also, gold will be a trade to check out with that many announcements going on. And Bernanke's going to talk again Friday. So it's like Bernanke week, Bernanke marathon. Stay right there. We'll be right back after this break.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page at TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
All right, welcome on back here to the Diagnostic Trading Hour. And like I said, it's been a big, interesting week. Just watching Ben Bernanke over on C-SPAN. And, the congressman have been trying to kick the crap out of him. And basically they want to get quoted in the media saying being tough on this quantitative easing, tough on inflation, tough on destroying retirement accounts. Now, it's amazing how they're tough there, but then they walk into, the congressional hall and they vote to spend and spend and spend and spend, which really is ultimately what leads to the entire problem anyway. But they can go back and they say, hey, look at this clip where I told Bernanke he was starting a currency war and killing retirement accounts. And then, they don't point out where they voted to spend, insane amounts of money that accomplished the same thing, if not worse. So, you got to put, all those pieces together. So anyway, so we put that right there together, and again, at the end of the day, no matter what I watch it more out of entertainment. So while I'm letting my trades work out, it's not so much that I'm trading exactly what he's saying. Okay, I think that's a bad idea, because it doesn't matter what I think about what he's saying. It matters what the price action is on the chart. So price is king, and price determines everything. Determine everything that you do in your trading, ultimately off price. So I do like to look at seasonals. And because they give me an edge of knowing, hey, what's the tendency, happening, in the market. I do like to look at statistics because they let me know, hey, at what points did I see a hesitation and a potential reversal, okay? And I do like to look at fundamental news announcements because I go, hey, what should I focus on and what should move? Now, I'm not talking about, I'm not so much worried about direction, but also if something's acting weird. If oil came in lower than expected, and so the inventories are down, the price should be up, and oil's going down. Well, that's a warning sign. That's weird. That probably means I just want to get out of the way. I just want to stop trading oil. Okay. At the end of the day, though, my choices, my choices are going to be based on price. So watching price, looking at volume, and very simple methods that I use. I use the other things to be one step ahead. To be like, what should I be looking out for? Where, when, on what market? So what market? At what price levels, when, at what time should I be looking out for certain things? So that puts me a step ahead versus me just reacting with price. I'm like, hey, I need to be aware we have a potential, issue happening right here. We're about to hit a deviation level. We're about to hit something like this. And it's like on the S&P right now, we can pull that up. Let's pull it up over here. And let me let's do a 10-minute chart. And right there, what we can see is, it went up, and it broke the deviation right here, okay? And then it broke it again right up here. So we're at 1.5 deviations right now. That's a pretty big move. And it doesn't mean we're necessarily out of the trade, but it does mean that we need to be very cautious. I'd be looking to, I have my stop right here where this line is. If we go over right there at the low, this is the lowest point I'd have my stop. I may even have it higher, but 15.10, and I'd probably honestly have a tendency based on how it dropped back down, closed below, went back up above it. The way I like to trade is if you have a close above, so like right here, it closed up at 1511.75, then it closed lower, and then it closed higher again. So the low of this bar would be my rules. So 1510.75 is actually where I'd have my stop on the S&P on the long, and so you'd write it all the way up. And I mean, I'd let you take it all the way. So you have a stop here, and if you go a little further, you have another stop. You go a little further, you have another stop. And so if we hit that, then I could look for a reversal. But I'm not going to go short just because it hits the deviation. I got to have something prove itself, and that's the first thing that has to prove itself. All right, I hope you'll have a great day. Give you a few trades to look at over the next 24 hours. Check them out, and I will see you here tomorrow. Stay tuned. We have another great show coming up for you.